Hello and welcome back to another episode of the Soar Financially Weekly Wrap-Up. My name is Kai Hoffmann. I'm the EdJR mining guy over on X, and of course your host of the Soar Financially YouTube channel. Really appreciate you joining me here. I'm in Melbourne, I'm in Australia, and I'm extremely jet-lagged, but I still wanted to get this out. It's taken me forever to put together, because when you know you're jet-lagged, you're ultra tired, and focus isn't really there. So bear with me here. I'm really trying my best to get you a really good update on what is happening in the gold space right now. What is driving momentum? What is happening? Why is gold trading over $4,300? Why is silver touching $54 as well? And what is happening in the world in general that might be influencing what we're seeing in the precious metals right now? I've prepared a few things, of course, as always, that I want to highlight, but I think the main takeaway or the main thing we need to talk about is really momentum. Lots of momentum going happening in gold and silver right now. But why is that? I think what we're seeing right now is a mindset shift, but with investors, institutional investors, generalist investors, but also retail. It's not just us, the so-called gold bugs anymore that are looking at gold. Voices are getting louder out there that there's a mindset shift happening. What do I mean by that? Let me show you something here. Let me bring it onto the screen. But it is things like this here. I'm going to let it run for 40 seconds or so.
And the U.S. government said, if you don't like these pieces of paper, we'll give you gold. And ultimately, we ended that. We're never going to go back to that, presumably, right?
Probably, presumably, that's right. But not if you watch these these cycles, that because you have the devaluation, then people don't have confidence in the fiat system over a period of time. And through history, they've at that point, the way that works is you print all this money, then you pay the debt with the cheap money, but nobody wants to hold it, so then they go back and link it again. It is conceivable that you can see a relinking of gold to money, but that's way in the future.
Right.
Is it really? Is it really way in the future? It feels like it could happen tomorrow, based on what I'm seeing here in the gold price momentum. Ray Dalio was one of the first ones to really bring this up and highlight that the debt-based system is about to collapse. Gold is telling us something, obviously. It's more than just fiat currency collapsing. It's the debt that is pushing us lower and lower as well. And he's even bringing up the chance that the money might be linked with something tangible, something real again, meaning gold or silver. Personally, my money is on gold, obviously. But is that really it? Like, he was the first one. You might have seen this short was from June 25th, I believe, this year. So it's already a few months old. So he was one of the first ones to mention that. But now we're seeing other commentators jump on as well. And the most prominent one just recently was Jamie Dimon. He says that it's semi-irrational to hold gold in your portfolio. Semi-irrational because of course, gold doesn't pay a dividend. It doesn't pay any interest. It's always better to buy a 4% bond, always better to buy a 4% yielding treasury bond. But is it really? What is it worth in a year, in 2 years, in 3 years, when the dollar starts to devalue even further? It's worth nothing. So semi-rational, you tell me. My point, though, is he predicted that gold in this current environment could run to $5,000 or even $10,000. And that's Jamie Dimon. He's the CEO of JP Morgan. Unfortunately, he didn't say anything about silver because, as we all know, JP Morgan holds the most amount of silver in the world right now. And it would have been interesting to hear what Jamie Dimon had to say about silver. But even just $5,000, $10,000 calls by one of the leading bankers worldwide is an insane statement to hear, because you all remember we've been laughing at people saying, well, 3,000 just is going to happen, and we don't really see that. Right? Let me share this tab instead. Sorry, I was looking at this here. It's just from the Financial Review. It's semi-rational, and he's talking about $5,000 and even $10,000 in environments like this. It's absolutely unheard of. Absolutely fantastic to hear. But again, momentum is building. The big names are changing their mindset. Their big names are talking about gold now. They're pushing their clients into gold. Talking about pushing clients into gold. Let me share this here. Morgan Stanley CIO now favors 60-20-20. That was published mid-September, meaning 60% in stocks, 20% in bonds, and 20% in gold. As you all know, the typical portfolio composition used to be 60-40, 60% stocks, 40% bonds, just to get a guaranteed yield. Why is he saying that? Well, there's turmoil in the markets. Bond yields might be dropping or maybe even rallying. It's not guaranteeing that, and your bonds will be worth less. Also, there's a duration and term risk in these bonds. You don't want to own 30-year bonds anymore. It doesn't make any sense. The emphasis here is on the shorter term or shorter duration bonds. We've had Ted Oakley on here, and he said, well, I don't own anything older than 2 or longer than 2 years. It doesn't make any sense. I don't get paid enough for it. So 20% gold it is. Next one talking about this, and maybe hitting the same token line here is Goldman Sachs. And Goldman Sachs estimates that if 1%, only 1% of the privately owned U.S. Treasury market were to flow into gold, the gold price would rise to nearly $5,000 an ounce. Well, is that what we're seeing right now? I think it is. Momentum is building momentum. It's creating momentum. That's exactly what we're seeing. Let me go full screen here again. So that's really driving gold. Of course, there are other factors. Geopolitics. I've prepared some things here as well. Maybe we can zoom out. Jerome Powell spoke this week. The U.S. government shutdown. Those are all, like, let's call them micro factors, because we use the term. We discuss the macro to understand the micro a lot here on this channel. But a lot of micro factors also influencing the gold price as well. Well, Russia and Ukraine, it seems like they're going head to head again. A lot of attacks, drone attacks on Russian energy infrastructure. But just a few short hours ago, I picked up the news that President Trump and Putin might actually be meeting within the next 2 weeks. They had a 2-hour-long phone call, which apparently was satisfying or satisfactory, whatever the term was that President Trump used here. We need a resolution to that as well, meaning, do we get the same resolution as Israel and Gaza? Doesn't seem like there's a resolution, really. There doesn't seem like there's peace happening yet. So we got to be careful with that. As I'm hearing, actually, that Israel's bombing North Gaza yet again. Very, very dicey situation there. Also, the videos I'm seeing coming out of Gaza is just appalling, and I hope that ends as well. It's just disgusting what is happening there. Not really sure we can call this a peace yet, and I don't think it's peace for the people living in Gaza from what I'm seeing as well. So very, very disturbing. What is coming out of there. Then on the other front, we got the tariffs happening. Like China has seemingly shut the tabs off in the rare earth space, saying, well, of course we're exporting rare earths, but you have to have proper applications that we need to grant you. So that's another thing that the U.S. government, or that we as gold investors need to be focused on, is critical minerals, but also tariffs. Trump last weekend said, well, if you're shutting off our access to rare earths, we're adding 100% tariffs on it. Boom. That was Friday. Crypto crash. A lot of people got wiped out. It just pushed the buttons. Copper dropped yet again below, killing the momentum that it had as well. Maybe let me show you the copper chart here real quick as well, just so you can see what I'm talking about. Share this tab. There we go. Look at copper here. Of course, tariff announcement, massive crash here in August, and then it was fighting back. Copper was building momentum again. I was quite bullish on copper, but then again, last week, copper was at 515. Oh, another 100% tariff, drops down to 487. Fights back, drops down again. Very volatile. So we got to be really careful with how we're positioned in this space. So let me bring this up. Sorry. We got to be really careful how we're positioned in this space, because tariff news or any news in that regard could hit us really, really hard. Look at this momentum. Look at these. Look at the volatility in general. Let's quickly take a look at the gold and silver price charts, shall we? Let's have some fun with that. Let me add those. There you go. Gold, absolutely phenomenal momentum. I always find it interesting because we of course, gold has already moved up to $3,400 before the Jackson Hole speech by Jerome Powell. But as you can see here by the Powell speech on August 22nd, just added so much fuel to the rally, and Fed rate cuts in combination now with the government shutdown are just pushing gold higher and higher and higher. Not QE, we'll get to QE in a second, but rate cuts or rate cut chances. Let me share this here real quick. As you can see, this is by the CME group. They put that out on a daily basis. 96.8% say, well, we're going to definitely see a 25 basis point cut. I think that's baked in, that's priced in. It's sometimes interesting to see that, well, maybe 3.2% say there could be another additional cut happening in October as well, but we're missing data. We don't have enough data or any data from the US government officials about unemployment rate, CPI, things like that the Fed bases its decisions on. Powell has already mentioned, well, we're also talking to ADP and others to get our data. It'll be really interesting as we have 12 days until the Fed meets again. And I think they're going into blackout here very soon. I think it's next week they're going into blackout, and we won't hear from them. In the meantime, we've had a lot of speeches. Jerome Powell just last week at the NABE, NABE, National Association of Business Economists event where you get awarded something. He noted something really interesting about QT. QT, we've been laughing at here on this channel because QT is more of a token amount right now. The Fed balance sheet is about $7 trillion and QT is about $5 billion every month. So it's just a tiny, tiny, tiny token amount. But he was mentioning that there might have been ample enough. Is the highlighted part here. He noted that reserves may soon be judged ample enough, citing some signs that liquidity conditions are gradually tightening, meaning we might run into a liquidity crisis here, including general firming of repo rates, along with more noticeable but temporary pressures on selected dates. We may approach that time in the coming months where they stop doing QT. Even that token amount of $5 billion a month might be ending. One might assume, well, next step is QE. Let's not go there yet, because apparently we're already in a QE environment. Repo facilities have dropped dramatically. One could argue that the Fed is already using quantitative easing without calling it that. Don't want to go that far yet. Always fun to put labels on things, but we're not there yet. We're not there yet. Although people always come up with new names for the same thing. Always use it. Transitory is a famous term here. What else have I prepared? Just on the macro side, I had one more thing. I saw Colonel Douglas McGregor tweet about it, so I looked it up, and I could really only find this here by Al Jazeera, is that Israeli forces shell North Gaza. Again, something we need to keep in mind. If this breaks out again, there's still the looming Iran risk as well that we need to focus on and pay attention to. Not focus on, but pay attention to, as this could always bring out curveballs that we might not be having or on our agenda on the map here. That's it from the macro side. Let's go micro. Let's have some fun with the micro, and let's start looking at some gold and silver charts. So gold 43.42 as we speak. Let's take a look at silver 54.02 or 53.97. It just jumped over, but S&P 500 is rolling over. We're seeing this here. Is this the beginning of something bigger? I have no idea. I'm not a technical analyst, but it looks nervous to me. And this is the S&P 500 chart. I think gold has been predicting something like this already. Look at this, the momentum. A lot of liquidity, maybe moving out of the tech names into gold. We've seen quite a bit of Bitcoin investors move into gold as well, following that crash last week, adding additional momentum to our sector here. A couple things else I wanted to show as well. I got here the GDX. The stocks are just moving higher and higher. Why? They're all producers in that sector. They're selling gold at $4,350 right now. They are killing it on the margins. They are absolutely killing it on the margins. And Q4, like the quarter we're in right now, is even going to be better than Q3, and we're only starting to see Q3 numbers coming out. Newmont is going to be the first one announcing next week, next Thursday, October 23rd, and that will be the bellwether in a positive sense for all the mining equities. I'm really excited about those numbers to come out. Seems like the market is excited as well. The stock is up 5% just yesterday alone, and Newmont, the only S&P 500 listed miner, of course, has massive momentum. We're seeing the same moves in the GDXJ. I'm happily positioned in those names. Personally bought the GDX and GDXJ just in the last few days, just to profit from that momentum, have a wide coverage. Of course, I don't like all the names in it, but it was the easiest way to cover that while I'm waiting for some private placements that I'm actually keen on to pop up. So what else have I prepared? I think that is it. No, I've got a few more things. Some interesting theories that I wanted to share with you as well. Tavi Costa, Brian London, a couple others have been discussing whether the U.S. government is buying gold here, and I want to believe in it. I want to believe in it. We've had those discussions about Fort Knox being potentially empty. You don't see it yet. I was looking at the Q2 import-export statistics, and the U.S. is not necessarily importing that much gold. We'll have to see what we get to when we get the Q3 import-export numbers, whether the U.S. has imported more gold from Switzerland than other places, where that will be reflected, but it hasn't shown up yet. So I'm taking that one with a bit of caution. I'm not saying this isn't a possibility. This is very well a possibility, but I think we're looking more at momentum right now. I mentioned all the banks and the big brains, the big investment brains changing their tune towards gold, meaning they're dragging investors along. And if I look at the S&P 500 chart, I think there's something brewing. So be careful out there when it comes to that. Couple more things I have prepared. One more thing adding to the stage is here. Real quick, Ore and Inc. I think I mentioned it during our last weekly update as well. Junior mining market, we're tracking financings, companies $1.5 billion in market cap or smaller, and financings below $100 million. All equity financings. I really wanted to highlight this because it's important to understand, because the next slide is this one here. So what have we raised in the last years? This is up to 2024. I'll share the current number for 2025 with you in a second. But if you look at it, 2011, ultra frothy bull market. We raised $8 billion within that coverage universe. After that, it completely dropped off dramatically. 2013, 2015, look at those numbers. It was absolutely disgusting out there. Me as a service provider, it wasn't fun. Trust me. I've learned my lessons. I've been ultra cautious. I'm not having that happen to me yet again. But look at also 2018, 2019, dismal markets, and now 2022, 23, 24, decent markets in comparison. We raised decent amounts of money, but we're blowing through those numbers right now as well. Keep in mind, the mining bull market really only took off right around PDAC. That was early March. And now we're looking at already capital raised just within that coverage universe. There are many more financings happening, a lot more dollars flowing into the sector than what we're covering. We're really only focused on the junior end. Keep that in mind. And we're already, mid-October? As per October 10th, we're sitting at $5.2 billion Canadian raised for our sector. So we're already nearing 2020 levels of 5.5. We're very close. And probably by the end of this week, we'll reach it. And then the next target really is 2021. As you all know, that was COVID times, bit of a bull market as well, euphoria, free money in the system. And now we're doing that without the free money. We're being alpha and beta is pushing us. Gold and silver are pushing us much, much higher. Amazing times, folks. Couple of things I mentioned meeting with investors the last few days in Frankfurt and in Munich as well is, please stick true to your principles. This market will float a lot of turds. Be very, very careful. What are you buying? What are you investing in? That said, you might have some FOMO because some of those turds run a lot better and a lot faster and a lot harder than many of the other stocks. If you see yourself as a speculator, go play those names. Have fun with them. Make some money. Don't forget to sell, please. Don't feed the trolls, though. Don't complain about this sector if you're feeding them. Please don't be a hypocrite, but be careful out there. Of course, it's easy to play. Of course, it's easy to invest in names that you might not be fond of because you see them promote, market, and rally. But pay attention. Don't throw your principles overboard is my key message if you're looking at mining equity investments this week. And not just this week, but coming weeks, months. Be very careful out there. We're only starting to see the beginning of a new flurry of mining projects coming to market, whether it's gold, silver, critical minerals. Who would have thought that we had so many antimony projects out there? Be really careful. Those are parting words here. Really appreciate you tuning in. Thanks so much for watching. As I said, I'm in Australia right now. Next week, we won't be producing any interviews despite what is happening in the markets. I'm on site visits. It's impossible for me to do those in person, meaning virtually even. But I'll keep you up to date, and I'll promise I will do a weekly wrap-up episode next week again as well, if you do want to hear it. Put it down below as well. Really curious what you're thinking, what is happening in the market. Really, just put your thoughts down below. I'll take everything into consideration and much, much appreciate your time. Thanks so much for watching, and maybe I'll see some of you in Frankfurt mid-November as well. Thanks so much for tuning in. Take care out there.